What's up, you Graham? It's Guys here. So let's finally talk about one of the most requested topics here in the channel, and that would be a complete breakdown of my $5 million stock market portfolio, exactly what I'm invested in, and my strategy going forward through 2021 and beyond. See, over the last year, I've just been consistently investing nearly all of my money into the stock market, and until now, I've never publicly shared exactly what I'm buying and why. Part of this was prior to this last year, what I was doing in the stock market was not particularly exciting. I was just buying the same index funds over and over again, and a video about,
hey guys, just bought more VT6, time in the market beats timing the market,
isn't as exciting as watching someone like Meet Kevin plow $500,000 into Peloton stock because he believes that gyms and hotels will soon be upgrading their equipment. But today, I guess that all changes. So with that said, here's a complete breakdown of my entire stock market portfolio, so that way you could see my biggest winners, my worst losers, my biggest positions, and my riskiest positions. But really quick, if you guys enjoy videos like this and you want to see more like them in the future, just do me a really quick favor and destroy the like button for the YouTube algorithm. If you do that, it gives me a really good indication if you want to see more videos like this, plus it helps out my channel tremendously. And if you actually go and hit the like button, as a thank you for doing that, here's a really cute picture of an octopus. So thank you guys so much, and now with that said, let's begin. Alright, so I'm not exactly sure how we should best break this down because this particular account was crafted around almost the bottom of the market in March and April of 2020. At the time, I was sitting on a decent amount of cash while I was waiting to find a good deal in real estate, but then when the entire market started tanking, I saw that as a good time to start buying up companies which I felt were oversold while the entire market was crashing. So I guess we'll start this one off with the stocks that saw the highest return from this account. The first one would be Plug Power, which is up almost 220%, and I have 1,000 shares. At the time, this for me was a bit more of a speculative play, so I didn't want to go too heavy on this in the event it didn't work out. But Plug was a solid company that I wanted to invest in because they were involved in hydrogen cell technology. This one is certainly a bit riskier because hydrogen power might not be widely adopted like battery power is, and it's a challenging path to success. But a year ago, I felt like this was worth the risk, and still today, I'm holding on to it. But then, of course, we have one of my all-time favorite companies out there, and that would be the Cheesecake Factory, or the ticker symbol CAKE, and for me, that's up almost 170%. Listen, for as long as I could remember, I've been a fan of the Cheesecake Factory. I remember my grandparents taking me there as a kid on special occasions, and the portion sizes were enormous. So now, of course, as an adult, anytime I go to a restaurant, I like to go to the Cheesecake Factory, take half the meal home, and with their portion sizes being so big, I have an entire meal to eat the next day as just a leftover. Well, as far as now where this investment came in, when everything was shut down last year and we're all stuck inside, Macy and I decided to order from the Cheesecake Factory as a date night. And when we got there, we saw that the place was packed. So I decided to invest $32,000 in a company that I like and use myself with the expectation that with that much demand, they're unlikely to go under. Well, since then, that investment has almost tripled, and currently right now, they're paying almost a 2.5% dividend. Now after that though, we have the one, the only, the Tesla. Now this is the second time I bought Tesla, but the first time I bought into the stock, which I'm still holding, that investment is up around 1,150%. This all started when I bought a Tesla Model 3 back in early 2019, and I just love the car so much that I decided to buy into the stock when it was about $50 post-split with the mindset of, hey, you know what, maybe one day it might end up paying for the sales tax. But yeah, little did I know that that investment in Tesla would be enough to pay for the entire car multiple times over within 2 years. But so far in this account though, I've kept buying in over the last year, and so far that Tesla investment is up another 120%. Now some of that was certainly luck in the sense that I invested a large chunk into Tesla stock right before they announced the split by pure chance. But the rest of it was, this is a company that I like and use myself, I really believe in the product, and I really believe in Elon Musk. Now at this point, I feel like having a few $100,000 in a single stock in one account is probably not the best choice from a diversification standpoint, so I'm not really buying any more right now. But this is something that I'm planning to hold on to for a very, very long time, and who knows, maybe Kathy Wood's prediction that this might one day hit $3,000 a share could be true. Oh, and by the way, if you want a chance to get a completely free share of Tesla, feel free to use my link down below in the description, and when you sign up for the free stock trading app Public, you'll be getting a free stock worth all the way up to $50. Plus, when you deposit $100 on the platform, you'll automatically have an opportunity to earn a completely free share of Tesla by April 16th. So best case, you get almost $700 just for signing up and depositing $100, and worst case, you're still guaranteed to get a free stock worth all the way up to $50. Plus, I'm posting all of my stock trades on there, so if you want to be a part of it, I would love to have you join. But then, of course, we have number 4, Taiwan Semiconductor Manufacturing, which is up another 120%. This is the world's largest chip and semiconductor manufacturer, and when everything was shutting down last year and people were shifting over to remote, tech-driven work, I just felt like this one would be a natural choice since I felt digital demand would skyrocket. Plus, since they produce chips for more than 10,000 different companies, including Apple, I felt like this would be a great way to diversify within a single company with a lot of growth potential. And then 5th, I probably just got too many to mention that I put varying amounts into throughout the year in various sectors throughout both tech and recovery. So instead of going one by one in over 50 different stocks, I figure instead it would be more interesting to show you my biggest holdings, because I think this would give you a lot more insight as to where I invest the majority of my money long term. So one of my single biggest holdings in this account is something that I recently purchased, and that would be Walgreens with a cost basis of $190,000. This is a company that I felt was a bit beaten down, they were widely overlooked, and they have a really promising future as the vaccine starts rolling out. Plus for me, this is almost like a replacement for my emergency fund in the sense that this stock over the last 10 years has been fairly consistent, and they currently pay a 3.5% dividend. So far my position is up about 10%, but again, this is something I just recently purchased and I'm planning to hold on to this for the long term. Although after that, we have one of my favorite all-time stocks that I have been buying consistently throughout the last year, and that would be Google. Now here's the thing, when it comes to this one, I'm definitely very biased because for those that don't know, Google owns YouTube, so in a sense, Google is kind of like my boss. Plus they have one of the most amazing search engine algorithms that pretty much everyone uses around the planet on a daily basis. So between being a company that I like and use on a daily basis, and plus I get paid on YouTube, it just makes sense that I would reinvest some of the money that I make here back into the stock of Google. Over the last year, that investment has made me about a 45% ROI. Then my 4th largest holding on here is a company called Enphase, and they specialize in solar energy. This is a company that my girlfriend Macy started buying when it was trading at $5 a share, and since then I've just kept an eye on it as I've watched it go all the way up to $60. But one morning in June, I had woken up and saw the price of Enphase had dropped all the way to $38 a share out of nowhere. And as it turns out, there was an article that came out from a short seller alleging mass fraud within the company and how they falsified revenues. Obviously, that was a very huge accusation, so I wanted to look into it further, and the more I started researching this, the more it came to light that the same company said the same thing a year ago. Well, they shorted the stock and took massive profits the entire way down. So I felt like this sell-off was widely overblown, and this is a good opportunity to buy in a stock that should not be trading for $38 a share. And since then, I've just continued buying in because I really believe they're a great solar company with a lot of innovative technology. Right now, that investment is up about 74%, and as they've dropped, I've recently been buying more. Then after that, we've got somewhat of a controversial one here, and that would be Boeing. There have been numerous problems with their aircrafts, constant delays, cancellation of orders, electrical problems, and a magnitude of other obstacles that they've had to overcome. But during the middle of a shutdown, I felt like it was very unlikely they would actually go under, and at $127 a share, I felt like that was a good opportunity to buy in. Plus back then, that worked out to a 6% dividend yield, which is insane for a stock that was normally trading at almost $400 a share. And finally, for this category, we have number 5, and that would be Facebook. Now here's a fun fact, but before Facebook went public in 2012, when I was working as a real estate agent, I sold a house to one of the early members of the Facebook team. And as that deal was closing, he offered to pay all of our commissions in Facebook stock at their IPO price of $35 a share. I thought about that very seriously, but instead, I decided to use that cash to go and buy my first rental property back at the very bottom of the real estate market. Now, today, yes, that Facebook stock actually would have been worth way more than that rental property, but if it wasn't for me buying that rental property, I'm not sure I would even be here today. So now I use some of my rental property proceeds to go and buy Facebook stock, and that way it all just comes full circle. Plus, they also own Instagram, WhatsApp, Oculus VR, and pretty much all of your data ever on the internet, for better or for worse. To me, they've proven to be a resilient company with the expectation that they want to continue expanding, and so far my position in this is up about 20%. But when it comes to all of this though, I think it might be really fun to have 2 more categories. The first one would be the riskiest stocks that I'm buying into, and the second would be the stocks that I have lost the most amount of money on. So let's just get that out of the way. First, in terms of my more, well, speculative investments, the first that comes to mind would be Fisker. This company was founded in 2007, and then shortly afterwards they came out with the infamous Fisker Karma, which at the time was a competitor towards Tesla. Tesla. However, even though the car looked really cool, it was plagued by issues, and it would sometimes just burst into flames for apparently no reason at all. The company ended up shutting down shortly afterwards when their battery manufacturer filed for bankruptcy. But a few years later, they were purchased by another company, they were restructured as Fisker Automotive, and now they're making electric vehicles again. But let's make it very clear, there is a lot of competition right now in the EV space. Most of Wall Street just refers to this company as a bit of a lotto ticket in the sense that, yeah, it does look cheap when you compare it to Tesla, although it's a long shot if they're ever actually going to gain any significant market share. But ultimately, I felt like this would be a calculated risk for me in terms of my investment here. Then second, we have a company called Gevo. They're a renewable chemicals and biofuels company, and they make alternatives to petroleum-based products. This is a stock that I got into about $5 a share, and since then, it's more than doubled when it was announced that the CEO of Gevo would be the head of Joe Biden's science team. Now, right now, there's definitely some mixed thoughts on the company. On the one hand, there's not a lot of demand out there for liquid hydrocarbons. They also have very high overhead, and some of their new projects are not expected to generate any revenue for another few years. But on the other hand, if all of their plans pan out perfectly, it could end up making a lot of money. I really just bought in this one with an amount that I was comfortable with, and then I'm just gonna hold on to see what happens. Then third, we have Blink Charging, which owns and operates charging stations throughout the United States. Even though I'm currently up over 50% from this position, the company itself, in my opinion, is just a bit meh. There have been accusations with this that they're siphoning money from investors, that ground site visits reveal the number of neglected, abused, non-functional, or otherwise missing chargers. There's also claims that the average charger is utilized for just 6 to 38 minutes per day. There's also a lawsuit against them, so it's yet to be seen what will happen. Despite that though, I happen to buy in this investment right before the massive EV craze. So I'm just holding on to a relatively small investment here just to see what will happen. The fourth, this one was probably a little less risky, but this was an investment that I made based on the infrastructure package that might happen. And that would be my investment in US Concrete Incorporated. This is a company that sells ready-mix concrete, and if the infrastructure package is passed through, they might stand to benefit a lot from increased constructions to roads, highways, bridges, you name it. As it stands right now in the proposal, roughly $621 billion would be allocated towards projects which would most likely use concrete. So at least over the next few years, I'm willing to take the risk on this just to see how this might play out, and worst case overall, it seems like a pretty stable company. But even though I have only named the winners so far, we should talk about some of the losers. Because I'll be honest, not everything I pick does well, and even during the massive bull market we've seen, it's impossible to have a few stocks which don't pan out, and for me, these are those stocks. Now first of all, even though a few of these stocks were just out of my control, poor timing, a few of the other ones were flat out just stupid purchases, and I knew that going into it. The first one, Nokia, down 37%. Now compared to everything else, I didn't invest a lot of money in this stock, but I did throw $6,600 here just to be a part of the meme movement. Next, we have AIC3, and this is my single biggest loser of a stock, not on purpose, and that is currently down 47%. Going into it, I felt like artificial intelligence had a lot of potential, and this company seemed very promising for anyone looking to get into the space. But after buying it earlier this year, it just started going down as treasury yields began going up. That put a lot of selling pressure on the stock, and because this is a company that I really believed in, I just kept buying the dip. The problem though was that it just kept dipping and I kept buying. And before I knew it, I had $42,000 invested in a company that's now worth about half. Now I'll admit, I still keep buying a little bit here and there as it's dropped, and I have no plan on selling. But this was a pretty bad loss that I still believe in, but only time will tell. After that, third, we have another meme stock, Blackberry, and that's down 51%. This one I feel like is kind of cursed because literally the second I bought it, it started going down in value. And lastly, fourth, we have Lordstown Motors, down the most of anything in terms of a percentage, and that is down 55%. Now they're an electric car manufacturer that went through a bit of a frenzy when it was announced that GM invested $75 million into the company. But it quickly became apparent that everyone just got ahead of themselves, and now they're facing a lawsuit claiming that they misled investors through its non-binding pre-orders, and the company was never on track to begin production within their time frame of September 2021. The whole thing here was a bit of a mess, but as you could see, again, relative to everything else, I didn't invest a lot of money in this. But still, being down 55% just is bad. But overall from this, as you can see from the actual dollar amount, I don't invest a lot of money in stocks I feel are risky, because I really just don't want to lose money on something that I'm not planning to hold on to for at least 5 to 10 years. Some of these were really just meant to be fun, lighthearted investments that just didn't pan out well. But some of them did, like NIO, which for me is up 46%, where I invested a lot more money because I felt more confident that they would do well. The point of all of this, though, is that I invest enough where if a few of them don't do well, so be it. And that's because I have enough longer-term investments that would more than make up for it. And finally, when it comes to the stock market, I've always talked non-stop about the importance of diversification and not trying to time the market. So a large portion of this account is dedicated to a simple broad market ETF, and that would be SCHB. This one covers the largest 2,500 publicly traded companies in the US with a really low expense ratio of just 0.03%. I've been buying this one on here so I get more exposure to the stock market beyond just the S&P 500, and I get more diversification across smaller and mid-cap stocks. Right now, this investment is worth a little bit over $1.5 million, and it's my single largest holding in this account. I've been buying into this fund on almost a daily basis with no exception, no matter where the market is at, with the intention of holding this until retirement, which is basically never. I'm never going to retire. But prior to that, I was using Vanguard's VT Sachs fund, which I still have. But with this, I wanted to take a more broad approach with investing my money by putting it in as many different spots as possible, so this is where I decided to put it. This account also brings in $3,750 a month in dividend income, which is set to automatically reinvest so everything can continue growing. I'm definitely not an aggressive investor by any means, and I really take the approach that, hey, I probably can't time the market, so I'm not even going to try. So I really believe my time is best spent just buying companies that I use on a daily basis, that I believe in and want to hold long term, with a broad market ETF just serving as the foundation for the entire thing. So I hope this helps for anyone curious as to where I'm investing my money, and my goal with this account is to eventually get it to a point where it equals the amount that I have invested in real estate. That way I'm never going to be too reliant on one specific investment, and at this point in my life and career, I'm really about consistent, long-term, stable growth instead of trying to maximize the value of every dollar possible. In my opinion, long-term investing is absolutely vital, and it'll be really fun to look back at this a year from now and just see how everything has progressed. So if you want to see something like that in the future, just make sure to comment down below, let me know, make sure to subscribe so you don't miss that video, and as usual, make sure to destroy the like button for the YouTube algorithm because it helps me out a ton, and thank you so much for doing that. So with that said, you guys, thank you so much for watching. I really appreciate it. Also, feel free to add me on Instagram. I post it pretty much daily, so if you want to be a part of it there, feel free to add me there. As my second channel, The Graham Stephan Show, I post there every single day. I'm now posting here, so if you want to see a brand new video from me every single day, make sure to add yourself to that. And lastly, if you want that completely free stock worth all the way up to $50, use the link down below in the description. Sign up for Public, you'll get a completely free stock. It's basically free money. You may as well do that, and you can follow me on there because I'm posting all my stock trades, so if you want to be a part of it, link down below. Thank you guys so much, and until next time.